Hey guys, welcome to TA with Rec. This is my first mini series. I'm going to start doing this on a regular day basis. My name is Marco, and I'm Rec, and I'm here to teach you about technical analysis and see if I can make you guys better traders. Because that's ultimately what I want to do: be able to teach people how to invest in themselves. That's all it is, pretty much. So here we go. Here's your first technical analysis video of me teaching you how to trade cryptocurrency. This is not financial advice. Do as you must. Research. But this is how I trade. All right. So for anything that I do, I usually use TradingView. Here, as you can see, we have a TradingView chart. And our favorite asset is obviously Bitcoin. So that's what we're going to be looking at today. So yeah, let's jump on in. All right, so what is trading? Trading to me is buying something low, selling something at a higher price, getting some profit out of it, and continue rinse and repeat. Obviously, that's what we want to do. Make sure we grow our wealth in order to provide us with anything that we want in life. But obviously, there are risks that we have to take in order to get there, and we want to be as risk adverse as we can. We want to save those precious gains, obviously. So to me, the way I trade is I do a little bit of everything. I kind of look at what variables are giving me the best option to go long on the position, where to pull out certain aspects of what you expect to happen by using previous data that has been given to you. Obviously by the charts. Every single chart is being recorded at every single time, every single minute. Bitcoin does not stop. It's the way of the future. And here we go. So first things first, obviously we're looking at a Bitcoin chart. This chart is obviously from well, obviously I'm on a daily time frame. It's always important to keep a different outlook on every single time frame. Every single time frame can tell a different picture, and it is your job to decipher that into the picture that you think is going to happen, or possibly what can happen. I mean, the thing is that I've learned now, you shouldn't expect. You should just make the right decisions, and it is what it is. Definitely don't invest what you can't afford to lose. It's bad right off the gate. Don't do it. It is a little bit difficult, but it is doable. A little bit about me. I was working 9 to 5 for the past 12 years, 13 years. And this January, I just decided up and quit. Had a little money saved up and decided I kind of stumbled upon Mitch Ray. Technical analysis, a big YouTuber. That's kind of where I started to learn how to trade, take options or stocks. I started off with stocks. I didn't really dabble into crypto how I am now. I did it back then, back in 2008 or 2008, 2018, 16, in those previous years. But obviously, I didn't believe in it as much as I do now. I've done a lot more research, and I'm kind of all in on crypto. Again, this is not financial advice. Everyone does whatever they want to do. This is just how I see the future. Think of it as the internet. No one really believed in that, and then look what happened. Just exploded. But yeah, so here we go. It's always, again, good to look at a big time frame to kind of know where you are in the chart. So I work off trend lines, weighted moving averages, Fibonacci levels, I think a little bit of everything. But let's start with the super common one, just reversals. So you would want to take a trend line from your previous high, and well, that's not it. Nope. Yeah, that's right. Sorry. Yeah. Get a new chart. Sorry about that. No. There. Okay. Let's start with the normal one. What I usually do, the first thing I do is draw a trend line from your previous all-time high to wherever the nearest one is. You can do it like that, because obviously this is where you broke. You were never able to regain the momentum above this line right here. You were never able to get above it. So guess what? You crashed down. So what I like to do here is you extend the line to the right. Once you do that, you see a clear picture as to breakouts. Obviously, when it started to get closer to this line in order to make us bullish again. Obviously, if you're below this, well, guess what? You're just going to continue to dump to the downside. So, sorry about that. So after we get down here, you're kind of not able to regain that momentum again, and I'll show you a different chart right now that kind of looks like that. But let's stick to Bitcoin right now. The other thing that I would look at is our previous lows. Obviously, all-time lows before this, or before any of this, obviously. So our previous low would be here. One thing, guys, definitely if you're gonna start drawing trend lines or horizontal lines, I would suggest stick to candle closes. Obviously where it closed on the specific time frame, or the wicks. Obviously, the wicks are the most. I like to go for the wicks because it just shows where the most action occurred, where it dropped down to, and where the actual reversal happened. So from here, obviously, the lowest low that we have on this little area beforehand would be right here with this little guy. So we just draw a line right there. And here's what we see. Obviously, we had this going up. We didn't really stop. And then obviously, we didn't have any more momentum to keep on going up from here. So we can draw another line right here. We're going to keep that green, and we're going to switch this to red. I like red to be bottoms and green to be tops. So that's how I do it. You do it however you want. So obviously, we went up. This hole is a trading range. You got to here, then you sold off very heavy. This is a crash back in May. So obviously, all right, we went down, and bam, we went all the way down to here. And as you can see, this was kind of where a reversal happened. Again, where does the candle close as to where it reached throughout the day? That means that this candle went all the way down to 28,988. Well, a little bit lower than that, but you get the picture. 28,700. And it dipped down all the way. So that was the lowest price that Bitcoin was at that specific day, which was May 19th of 2021. And then obviously during that same time frame, you got back up because obviously a lot of people didn't want us, miss out on the 28,000 Bitcoin after we had just such a great run up to the top. So this essentially was a bottom. It was the bottom. Obviously, as we can see with data going forward, which is exactly what I mean. Obviously, you get chopped. You went back up. You chopped. You stayed within the range, and then here's your next level. Because you didn't reach anywhere above this. So we draw another line at D. And since this is a top, again, we're going to switch this to green. So now that you went down, look at that. You tested the level again. Look what happened, 28,737 again. And you shot back up. You closed above 30,000, 31,000 because, price action just did not want to see a Bitcoin at that 28,000. A lot of people believe in Bitcoin and they think it's a future. As you can see, El Salvador just adopted it as currency not too long ago, last week. So you went back up, obviously, and then you never crossed again here, this little level. So I guess you can call it top, but to me, this is the real top. This is the highest high in recent, lowest low in recent. So you went down, and look what happened again right before you really sprung up. You came back down to try and test this level again, and you only got to 29,300. And that's kind of what you want to see. You want to take trades that you see one bottom, two bottoms, possibly a third bottom. Third bottom, obviously, are more, you got to think in the rule of threes. 1, 2, 3, reversal. 1, 2, 3, reversal. So you just came back down and Oops. So, let me do it. Came back down. So 1, 2, 3, reversal to the top. And as you can see what happened here. Okay, we sprung up and we had how many days of bullish momentum? We had a total of 9 days straight up, just went up 43%, 43% in price. And obviously we sold off. But what I really want you to take from this is we broke this little trend line of our previous high. We broke it, and then yeah, we reversed. But I mean, obviously we had 9 days of pumpage. You have to expect a reversal at some time. You know, breaks do happen. Look at it's green, red, red, green, red. You know, so you got to think in terms of patterns. But you were above this little line, and look what happened. You sold off. Yeah, you sold off. But now you made a lower low, a new higher low, which is right here. So now you can consider this your new bottom. You sprung up, got back down here, and you just sprung. You had accumulation here, which was good. And look at once you broke this trend line, you really went up. So now here's where it really comes into different days and obviously different structures when you go into a different time frame. So now that we're in a bull trend, right? You know, obviously we broke this resistance line, we're back above this resistance line, and now we're going back up. Again, this was the El Salvador crash, you know, buy the rumor, sell the news. You sold the news here with El Salvador, you know, adopting cryptocurrency or adopting crypto as a currency now as a form of payment. So obviously you sold off, and you got to remember, well, how do you not expect a reversal when you really were on an uptrend for, you know, 47 days? Kind of, you know, in the long term things, it doesn't really look that bad. Even from here, you know, this little dump, what happened beforehand? You went all the way up from here. Again, 43 days. I mean, it kind of just it's patterns. So we look at a 4-hour now, and this is what I mean by earlier, where these 4-hour candles kind of tell the same picture. Obviously, it's just in different time frames to give you better access to where you kind of see the price going in the immediate time frame that you're looking at. Like here, obviously we're still in an uptrend. We haven't broken below our lowest low, so I still consider this to be bullish. As you see here, we dropped off that big zone, so that's 1, 2, and I think we're in good shape to continue to go up. Right now, our highest high is currently right here. So in order for me to be bullish, we would have to break this line. But we're still above this line, which is great. I mean, you can't really complain. You're still in profits. If you took the trade here, you're technically still in profits. Again, these are all just different levels. 15%, it's not bad in $1,000 investment. You made 150 bucks. So another tool that I like to use is the Fibonacci. The Fibonacci is a sequence of numbers, patterns, and strategic entry lines. So you always want to do, again, low to high or left to right. So in this case, we pick our highest high to our lowest low. And as you can see, it's kind of crazy how it hits these levels. Sorry, you know, obviously first bottom, second bottom, third bottom. So let's assume that you took a trade here, right? You took a trade because you knew that this was the low zone. Obviously, if you break down below this, you're going straight down. You know, you don't have any other support looking left. Look at that. Your next support level would be 16,000. So you went from the 1 to the 382 to the 236. Like all of these are lining up. And then from 236, you kind of went up all the way to a little bit above the 5, but you came back to test a level that you had from previous highs on your daily chart. You know, look at that right here, 52,700, 52,700, and you sold off. Make sure, yeah, September 6th. Okay, so yeah, that was our high. And this came back from this level up here in, I guess you can consider it right here, February 17th. That was our highest high back then. So another great level either way. And now you're staying above the 0.5. And kind of what I always see is, you know, it goes from here to the 3, 2, back down to the 5. And from the 5, it usually gets to the 786. So let's just say here. And then at the 786, it makes either a break to the upside or a break to the downside again. So let's say you get to the 786 and it just kind of goes right here, bam, and then it kind of just goes like this. And you're always reaching, sometimes you reach the 172, 1414, 1618. And then you always break down because obviously it's a point of reversal. And this is kind of where you gotta see things. So let's just say that it's a good strategic area for us to take a trade from this 0.50, at least to the measure move, which would be, again, from your highest high to your lowest low. And now let's just assume that obviously since this is congestion area, I would probably put it right here at our previous high. So let's just say that our move essentially takes us from where we want to take the trade, which is at the 0.5, because we know that at the 0.5, it's either going to break to the downside or break to the upside. We already had one low, two lows, and we're back above that 0.5. And we're going again for 30, 40%. Look at that. Perfect, 42%. And if this breaks to the upside, then, you know, we made gains. But this is how I take the trade. I always want to stay within certain ranges of reversal points and exit trades at reversal points. Or the thing is, this is crypto. Anything can happen in crypto. I've seen it happen. So it's just taking risks and obviously minimizing that risk as much as you can. The other thing that I like to use is, I'm gonna exit out of these. Let's get rid of that. Actually, let's keep these lines. The other thing that I mentioned earlier that I like to use is WMAs. So this is mine. You can change it to whatever you want, but the way I have it set up is we got a 7, a 21, a 90, a 200, and a 144 day weighted moving average. And what this does, it obviously tells you what, in those 7 days, what is the price action at that time. The only one that I really have showing for me is the 21-day moving average. Is it the 21 day? Yeah. Nope, the 90. I lied. Yeah. The only one that I shown with a line is 90, just kind of gives me 90 days of the previous, so that's 3 months. I kind of just use it as a, that could be like your lowest low in the past 90 days. As you can see here, in the past 90 days, even when we were reaching up to this little level, we obviously had a touch here with the wick, another touch here with the wick. So obviously the 90-day price action is still in play. But the good thing is that we're staying above it, you know. These are obviously 3, remember, these are a 7, a 21, and a 90. You know, And again, this is all with price action. And what I like to look for is congestion areas. Bam, broke down. But look right here. Once the white crossed over to yellow, bam, we went up. So I like to use these kind of again to kind of show me where the price action is. Obviously, if you got to maintain above certain levels, and what levels do you want to stay above? So always have a plan on how you want to trade it. You can do it super simple where there's another one called Market Cipher that kind of does it for you. And here, what I would look for is strong, obviously, change the color of the top line so you can really see it. So like something like white and then something like that, but like that. And then your bottom one, which would be your 8, I would probably do it like this. And I would do it as a red or something, whatever color you want to do. Let's do, yeah, let's do that. So kind of what I want to bring up here is when you break out of these, you kind of want to stay super above all of these EMA lines. Once you stay above all of these EMA lines, it kind of just tells you if the price is obviously doing well and not moving to the downside. This would be your bottom line. This would be your bottom line. And obviously, as you see, when you're going up, you come and test that line to see if you have support there, and obviously you break to the upside. Except when both of these lines start getting super, super close to each other and you have a breakdown. Well, you had the breakdown, yeah, and you had it all the way up to here. But now this becomes your resistance line. And if you can't break this, you can't remain bullish. So let's just say for little giggles, we're going to do another line. And we're going to do it right there. So we never got anywhere close. We never got anywhere close. We got here. And look, as you can see, we came back up, but we weren't able to sustain it again. And we broke down again. So we had 1 break, 2 breaks. And this second break just took us down here. And as you see right here, look at you came bottom, second bottom. And when you came up here, you couldn't cross over here. You couldn't cross over this to go to the upside. So guess what happened? You continued down, 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 down until that on this, on the daily, you have 4. Well, 1, 2, and 3. And this is at third bottom. And look at that. You were so close to it that you broke it and you never came back. So now look for here is again, look at this, broke, came across. Lines are not very separated here. So we just need to come above this little level right here. Don't have anything else right here, obviously because the 1 day is crossing over. And if you look from here, this is kind of what happens. This looks like this right here. So now our measure move will be this. So let's just say something like that happens. Kind of takes us to whole new time highs. I mean, that would be very, very beautiful. And let's just say again, let's see what kind of levels the Fibonacci says, right? Again, because it's all multiple things that we got to look at. Well, that's not way too far off from this one right here. I don't know. Could happen. So let's just say that this is going to be one of our targets. And this is going to be our next target. And let's just say we're going to be really, really bullish, right? It's going to be a third target. You heard it here first, folks. Now imagine if you had this run up right here from the last cross. I'm just going to draw it out just to kind of want to see. Let's make this Let's make this gold because, you know, it's going to be our golden boy. Look at that. Look at that. Look how perfect that is. Look at that. That looks like the first wave. Does that not look like the first wave? Look at what's happening. That's insane. Look at that. Next peak would be at the 1618 at 87. Man. But let's not expect anything. Let's just hope that the TA plays out, you know? Because that's all it is. Here, look at let's look at this little section right here, just so I can show you how the Fibonacci works. So let's do, we're gonna hide this. We're gonna keep these. So that way when we come back, we can just showcase to everyone that we, excuse me, that we're smart, you know. And we're gonna leave those there. So this is why I say that the Fibonacci works. We're looking at the period right before the dump, and we're just gonna take our previous high to our previous low. And would you look at that? From here, came back down, 0, right? 1, 2 bottoms. Obviously, this is another bottom that got down here, so let's just call it here. Bottom, second bottom, third bottom, and you just sprung. Look at that. You went all the way up and tested, tried to test the 786 on this day. Couldn't sustain it, so you came back down. Congested, you know, obviously. Came back to the 5. Look at where these candle closes are closing. Came back to the 5, and then from the 5, you broke. You broke. Just like I said, because at the 5 or the 786, reversals happen. And look at that. You got all from the 5, you came all the way up to your 786. And look what happened. Yeah, you sold off, couldn't sustain it, but you stuck around that area. And look, bam, upside. And from here, you went straight to, look at that. You have a candle close or a wick close, wick at 1414 to 414. Stayed above the 1272. Another reversal up from the 172. I mean, yeah, you were a little bit below it, but it's, again, these are just levels that you got to keep in mind. Bam. You came and almost touched the 272, the 227, the 2272. Sold off. You came back down almost to the 1, but you couldn't do it. Came back up. Sold off. 6-1. Came back to the 2414, a little bit above it. Sold off to the 1618. 1618, obviously, all the way back up to the 1272. Congested. Bam, 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 bam. Sold off. Stayed above previous inflection points. Back up again. Got to the, well, this was a 2618. You closed at it. I mean, guys, T is right here. From here, couldn't sustain it, and bam, you sold off heavy. Came back to the 414, had a little spring up to 1272, but now look at that. You couldn't sustain it above this line in order to remain bullish, so you couldn't do it. So guess what? You're gonna break down, and now you have your trend line, but now you broke down. And that's what I mean, that the fib works. The fib works. It's just the other thing we got to talk about. We haven't talked about MACD, RSI. So let's bring those puppies up. Again, you got to remember, each tells you a different story. Here on the MACD, what I look for is, you look at one. This one, I like this one because you can kind of tell when you're really bullish and kind of when you're not. This one kind of just points it at you. Above anything above this like line right here is bullish. A little bit bearish, bam, bullish, bullish, bullish. And then you really became tanky. And as you can see, these are the days that you really started breaking down. So you gotta look at the picture as a whole. So this picture really looks like, take it all away. It looks like. So right now we're definitely above it and we're curving. We're curving back up. So hopefully from here it just keeps on going up. Again, we're just taking old technical data and seeing where it's at. This gives you a good picture when you put these two together. Relative strength index. These bars kind of tell you where you are in the buying process. So anything under 40 is oversold. Anything below 30 is oversold. So you want to pick up always at these areas, because from here, this is where you have the most gains. Look at this, May 19th. I had the brush. May 19th. If you would have, this was your bottom. This was the first sign. Second bottom. Second sign. Third bottom. And look at, you're always staying below the 50. And that's what I mean. Anything below 50 is oversold. You kind of really don't want to get into it until you see 1, 2, 3. You got to look for threes. So threes, one bottom, two bottoms, three bottoms. One top, two tops, three tops. Look at that. One top, two top, and look at this over here. Two tops, three tops. I mean four tops, but rarely. And then at the four top, you just sold off. So same thing here. 1, 2, 3. And if you would have gotten in here, you definitely eliminated all this risk of going back up and down, because you know you're getting closer to this trend line, and it's going to make a move either to the upside, downside. So there we go. All right, guys. Well, I think this was pretty informative. Reach out with any questions you guys have. Kind of let's start doing these videos on a daily basis. I'm going to go over the main four for sure: Bitcoin, Ethereum, Cardano, and probably my favorite, maybe like a Link or VeChain or something along those lines. Or I'll take requests. Hey, let me know what cryptocurrencies you want to get into, and we can go from there. All right, guys. I will talk to you all later. Peace out.